is trade 666. When funny story, when I knew that we were coming to this trade, I just envisioned that it will be a loss just because of this number. But this was a pretty classic trade and a very simple trade. I took a call credit spread here. So essentially this is going short the market. And I'll tell you what I was looking at with this RUT trade and how I executed. So again, right from the trade previously that we went over, and I saw that we could not, we RUT couldn't. Okay, the bears are dominating this market, so I just need a nice entry point to go in. And when I'm looking at entry points, I like to look at different trend line breaks or different patterns. Right now, this looked like a bear flag, right? So essentially, we had point A to B. This is the downtrend. And then we made this flag pattern of higher lows and higher highs. We can even make it with a channel. And essentially, once we cross this level, this is when I knew, okay, we can go short the market. So the next day, if we take a look at the 5 minute, the next day, it was just, this was the Friday, March 28th, where we went down almost 2%. I think one thing I want to start doing on these days is making it a day of higher return, right? If I get this much volatility, I should be profiting more money. Or maybe that's just the greed in me and I should just take the wins while it's there, right? So let's take a look at this trade. If we take a look at where I entered on the 5 minute, we entered on that fourth candle down, which meant my break even was actually around the high of the day, around the open. So again, all I need is price to stay below this 2,600 level now because I'm going short the market. And if you just look at if you continue that day, you see exactly what happened. And this was a profitable trade that I sold in probably 30 minutes, right? Because we had this much volatility. But this trade all started with the higher time frame analysis, right? So let's clear this drawing